All right, welcome to Unfoolish Investing, everybody. My name is Victor, and I'm here with.
I'm Larry. Thanks for joining, everyone. Episode 3. My goodness, already.
It's amazing. And when we last left off, I believe the market had completely collapsed due to the yen carry trade. And we were talking about how there was going to be a lot of buyer's remorse going on in the market. And over when we woke up Tuesday, we were in green and it continued that trajectory the entire week, where everybody that panicked due to what was going on in the Nikkei, due to the yen carry trade, were like, what are we doing? Things aren't dying after all. We need to get back into this market. And we spent most of the week recovering almost 100% of everything we lost. What do you say to that, Larry?
Um, Buy and hold, see dips. If you've got money to capitalize on them, do it. With high conviction stocks that you plan to hold for 5 years or more.
Yeah, I couldn't agree more. I think that for me, I tried getting in. I actually put an order in for CrowdStrike to hit in the 198 range because
Just missed it.
prior to market opening, it was in that range, and then
Uh-huh.
the market opened and it hit into the low twos, and then everybody was like, "What are we doing?" And it ended the
Yep.
day in the green.
Yep.
Did you have any orders in that day?
I didn't. I thought about just buying at market. I don't usually do limit buys or anything like that. I'm more of time in market is you're gonna beat timing the market. Um, so for stuff like, for your example, like $201 versus $199 a share, 5 years from now, it's not gonna mean anything.
You know,
Um,
that's a fair point, Larry, and you're making me feel bad about missing out. Maybe I should have
I
bought
didn't
it
buy
at
either. I
maybe
didn't
I should
buy
have
either.
bought it at that $201
Yeah,
range, where I think it's like in the high 230s right now, which I
yeah,
could have had a little 15% plus on my money at that point. But
239. Yep.
I digress. Today we're going to talk about compounding in coffee. For everybody that is unaware, compounding is when you start investing your money in the market, little by little, and slowly over time it grows. So, to give everybody an example, over a 10-year period, our three indexes that we talked about in episode one, VOO, QQQ, and Berkshire B, grew roughly 12 to 13% each, with the NASDAQ 100 steamrolling ahead of everybody over the last 2 years to just under 18%. Now, had you been compounding in buying over that time, I'll bring in my one of my favorite sites, NerdWallet. A little investment like $500, investing $100 monthly over just 1 year would turn that $500 into 1,800. But if you added in that 10-year time frame, that 1,800 is now 23, almost $24,000. Um, that is the brilliance of compounding, and why any young investor or investor in general that is buying into these indexes needs to be looking out long term. What are your thoughts on a 10-year compound, Larry?
To your point, totally agree. I think the earlier you can start investing, the better. And I don't think people should, um, kind of pigeonhole themselves into thinking, oh, well, I need I need $5,000, I need $1,000, I need $10,000 to put in, start with $50. If you've got 50 extra dollars, put it in the market, forget about it.
Let's run that
And
scenario. $50,
let's see it.
a $50 deposit initial, $100 a
Yep,
month.
yep,
After 10 years, you would have $22,000.
yep,
22,000, and that's on $50.
yep. So if it's $5, if it's $50, put it in there and just let it grow over the years, 10 years, 20 years, 30 years, depending on your time horizon. Um, pay yourself first. That's how I think of it. Investing is paying yourself before you pay somebody else.
100%. 100%. And I think that that's the big thing. And for me personally, I look at my kids, um, and so as young as 11. And if I can just put away 50 for them and then just add in small amounts, they have a much longer time to compound.
Yep.
Much longer. And just kind of like throw out using your $50 example, a, a 10-year-old compounding for 40 years. They started with
Yeah.
$50. That $50
Kid's a millionaire.
turns the kid into a millionaire. And that's
Yeah.
using a conservative 12%. If the market performed and it was the net, did better, you're looking at 5.5 million, you know,
On $50. Yeah,
on
it's
$50.
mind-boggling. Yeah.
$50 can turn any child into a millionaire starting from age 10 to when they're
Yep.
50. You know, again, you could drop down the conservative and it's only $500,000 if it's only 10%, but the market traditionally has done better than the 10%. And again, throw in that 12%, you get a millionaire. And that's, to me, what parents and others should be thinking about with the younger generation is as little as $50. Now, again, if you're later on, maybe you can afford a little bit more. Let's just kick that number up. Let's throw that to 5,000. You're putting $100 in monthly. Maybe I'm 30. I'm like, am I going to retire? I don't know. 30 years. I have $4.5 million. And for me, that again is being conservative. But $455,000. And it's like, that is the big thing with compounding.
Yep.
It's putting in what you can and just waiting for that growth.
Yep. I mean, if you break down investing, it's three things. It's taking an action to buy something, doing nothing, and then taking an action and selling it. And the two actions, buying and selling, could take up a few seconds, maybe a couple of minutes. Holding it's the hard part for decades and decades.
Correct, correct. And I think that's the toughest thing. And I think when I look at something as little as $50 and thinking of what that potential is for
Yep.
pretty much any parent out there, um, you know, it's life changing. And for me, if you just look at, you know, how the numbers grow, like in 5 years, you're looking at 8 grand. In 10 years, you're looking at 22 grand. So in that 5 year time frame between year five and year 10, right? You more than doubled your money.
Right,
Now,
almost tripled. Yeah.
and if I went out to 20 years, what do you think that $22,000 number is going to look like?
close to 90K.
91,000.
That's close. Okay.
Yeah.
It just
You were
it
pretty much spot
mushrooms.
on there. That again, it's that compounding of interest, long periods of time that I can't drive home is probably the most important thing to learn and understand to any unfoolish investor. And I think that,
Yep.
go ahead.
And I was just going to go back to the three indexes that we talk about. So, VOO and QQQ, you're gonna get a small dividend from those, very small. Um, if it was me, I would just reinvest the dividends um, as you get them, and that'll help compound a little bit quicker. Um, and then for Berkshire B, you're not going to get a dividend, at least as of 2024 when we're recording these. I doubt they'll ever pay a dividend. Um, but you will compound in a way because Berkshire is constantly buying back its own shares. So there's fewer shares on the market. So your share gets more valuable because the dollar value of the share goes up, but also the scarcity of the share.
Spot on. And I think again, um, $50, we just showed that you can turn $50 into $1 million. And that's the brilliance of compounding and why anybody sitting out there should understand that they have the ability to be a millionaire, multimillionaire. It takes time and it just takes a little bit of sacrifice um,
Yep.
to
Time, discipline. Yep.
get there. And for me, I'm like, you know what? Invest that money. Even if it's a small
Hmm.
amount, don't just focus on your debt. If you have debt, focus on that investment because your future, you can't get these years back. So getting in the market now is so key. So key.
Right. Depending on what kind of debt you have, you could gain more in compounding through stocks than you would, you know, just doing the minimum payments. They say a mortgage, you've got a 5 or 6% mortgage, but you could get 12, you could get double that in the stock market. Just keep paying your minimum payments on the mortgage as opposed to trying to pay some extra down.
Agreed. Agreed. Because that extra could turn into
Yeah.
hundreds of thousands of dollars
Yep.
in a short period of time. And just kind of driving home 20 years out. Um, these are what the indexes we recommend and how they're performing. Again, as you can see, S&P and Berkshire sitting around that 10% at the 20 year. NASDAQ is crushing it. Um, right now, 14.5% over 20 year. I will say, and I kind of drive this home about NASDAQ, um, NASDAQ didn't do anything for 16 years. So when it started out, the NASDAQ 100 literally did not move for 16 years. And then everything took off. And it's been on fire since then. So, like, had you been compounding over those 16 years at those lower
Yeah.
numbers, right? And who's to say that that can't happen again? And that's why you try not to time your buys. That's why you continue to buy in over time on a regular basis. I believe we've been talking a lot about dripping, um, buying fractional shares, getting in there, and just continuing to buy over time. Because if it goes down, you're in. If it
Yep.
goes up, you're still in. You're not looking for the points. And
Yep.
anything left to say about compounding before we move on?
Yeah, my last thing, I'll quote one of the legendary inventors and infomercialists of all time, the great Ron Popeil. Showtime rotisserie. Set it and forget it. That's all you got to do. Just
Oh,
set these things up automatically and just take the emotion out of it. Just let it do it for you.
I love
Set it
that
and
Ron
forget it.
Popeil quote. I
Yeah.
love that. Thank you for
Yeah.
sharing that. Ah, I forgot about that guy.
For our viewers out there, look up Ron Popeil Showtime Rotisserie. The whole infomercial's on YouTube. It's a time capsule.
Oh, my God. Yes. Oh, there's a podcast in there somewhere. Moving on. Moving on. For the second part, I'd like to talk a little bit about coffee. Um, for that, um, Starbucks and Dutch Brothers. Um, Starbucks and Dutch Brothers are probably the two largest publicly traded companies. For anybody that's thinking about Dunkin' Brands was initially public, but they were taken private, if I do recall, sometime in 2020, 2021.
I think that's right, somewhere around there. Yep.
Yeah, so they are no longer
Hmm.
publicly traded. Um, So for me, when you hear coffee, and I love coffee, I'm not sure about you, Larry, but I love coffee.
I have taken to coffee the last couple of years. I wasn't really a big coffee drinker before, but now I tend to have it almost every day.
It's delicious. It gets you going. And for me, when I look at Dutch Brothers and Starbucks, I feel like quality sets them apart. But for me, personally, I've been leaning a lot more towards Dutch Brothers the last couple of years. And after analyzing their stock when they came public in, I believe, 2021, um, you know, they've continued to demonstrate growth. Um, they have this insanely aggressive expansion strategy by increasing their market penetration. They just keep on opening stores. Where I see Starbucks open stores, they're not opening stores in growth mode, like Dutch Brothers is. I, you know, their Dutch Brothers is so focused on revenue growth and brand recognition. And they have this drive-through presence. And I want to explain the drive-through presence and why I love Dutch Brothers so much. Um, Everybody out there has probably, or maybe they haven't, been to a Chick-fil-A. And when you walk into and when you go into the drive-through of the Chick-fil-A, it's like that different experience where there are people walking up to your car, you're not waiting to get to the window, people are putting your order in, and then maybe you just get a chicken sandwich and there are still six cars in front of you, but somebody's running that chicken sandwich out to you because it's already ready to go. And that's what Dutch Brothers is doing with coffee. So you could be stacked in a line at a drive-through, Larry, and have a smaller order than someone else, and they have runners. They have runners going out to your car. They're so focused on the drive-through experience
Yep.
because they're focused on the younger demographics that they see best aligns with their consumer brand. And you know, how do you feel about Dutch Brothers or maybe Starbucks? Are you invested in either one?
So I actually own both. I just recently started investing in Dutch Brothers. But coincidentally, Starbucks is literally the first stock I ever bought. Um, so I don't know a ton of it. I just bought something because I was like, oh, I like Starbucks and I'm new to investing and I understand Starbucks as a business. Um, so I'll buy a stake in it. And, up until recently, it done quite well. They've had a pretty big pullback in the last 6 months.
Yeah,
Um,
and if you look at Starbucks right here on our chart over the past year, they're down roughly 23% as of today. If you go into Starbucks 5 years out, you're not doing too well. But if you were a long-term investor, you're still sitting on a dramatic amount of gains. But I feel like Starbucks is they're in a status that I like to kind of look at as they're trying to figure out um, what to do next. We have all these, you know, operations that are open, but they're trying to figure out how to get people back into the stores. Because initially, and I'll throw it out there, and this is the difference between them and Dutch Brothers, most Starbucks, if I recall, were never opening with drive-throughs. They were all in
Correct.
office
Yes.
buildings or they were in something. And what are we not using as much these days?
Right.
And I
Oh yeah. Yeah, I agree with you to an extent. I think the marketing has changed too. So like Starbucks used to be the third place. Um, where you had work, you had school, where you had work, you had home, and then Starbucks, where you went to hang out. Um, I don't really think people are doing that much in Starbucks anymore, and I don't think they have the stores set up for that atmosphere anymore. There used to be like couches and, like jazzy cafe music playing. Um, Now there's really not. You go into a Starbucks, there's two aisles, you walk in, you grab the coffee that you order on the app. You didn't even have to go into the store to order the coffee, and you walk out. So I think a lot's changed since they opened.
Yeah, and I mean, again, I agree. I think that they definitely have they definitely have shifted. I feel like all the Starbucks that are around me are more focused on their drive-throughs or if they've been
Yep.
put in recently, and the lines are still backing up. I'm not going to say they're not because they still
Yep.
create traffic jams. But there's something about those Dutch Brothers windmills and the growth and the culture. And I mean, I believe well, I at one point when I was researching them, I discovered the employees were often referred to as growistas. Um,
Oh, I haven't heard that.
and,
Interesting.
and they're encouraged at a high level of enthusiasm and friendliness. Like they're supposed to be overly energetic, which is phenomenal. Um, and I definitely feel that um, because I feel like it's so important to that core identity that the company and brand is trying to put out, um, which to me, strong employee growth, employees loving what they do, just transcends um, over to the customer. And for me, that's it's that it's mixed with the growth that it's just like I can't even continue to drip into Dutch Brothers enough. I used to own Starbucks as well. I recently parted ways with Starbucks, probably within the last 6 months, mostly due to their expansion over in China. And I just didn't feel like things were flowing in the direction I wanted. So I may come across a little more partial to Dutch Brothers. And let's just look at Dutch Brothers stock over the last year. Um, you know, down roughly 13% over the last year. Over the last 5 years, again, they've only came public in 2021, um, late 2021, I believe. Again, down roughly 30%. I'm still in the green, which goes back to our initial segment of compounding. I was buying in an awful lot in the 20s when they first started out. Then, as you kind of see, it peaked up around 80, and I'm doing my happy dance. I'm sure you've done your happy dance at times with some of your stocks have gone up. But then it kind of everything started coming down. Had anything changed? For me, no. The fundamentals for Dutch Brothers were still there. They were still rapidly opening stores, right? Um, the employee um, feedback that I was reading was was insanely positive. the drive-through experience, which to me I find is super important in this culture. Even though I am the person that will pull into the parking space and go inside, mainly because I don't like sitting in lines, but I also like to experience the entire brand that I'm potentially investing in. I want to understand how everything is. So if I went into a Dutch Brothers and I had a horrible experience inside, I would think twice about investing in a company, no matter how good the numbers are. But, how do you feel about, the food experience, the retail experience like this, where, you know, you know, experience the in and out of the establishment?
So to me, I think the experience is important. I think it's less important than, the quality of the ingredients. Um, which, I think both of these companies, Dutch Bros and Starbucks, both use really high quality ingredients in all their offerings. Um, so I think you talked about the energy of the employees. I think that's another thing that Starbucks kind of lost. Um, is they used to have that. If you go back 5, 10 years, I feel like the baristas used to be like that, and they aren't anymore.
Yeah, and I mean, how do you feel about giving back from a brand when you're investing in it? Do you look into whether or not they're charitable in the communities that they're putting storefronts in? Um, how they
I
act?
do think that's important. Yeah, I think it should be. You want to see a win-win, not a win-lose. So if the company can still make piles of money, hopefully for their investors, and improve the community at the same time, um, that's something that would make me want to invest even more if I could.
Yeah, and for like any parents out there, one big reason why I love some of the stuff the Dutch Brothers did is they've done like things like Buck for Kids, which is a company wide fundraising initiative where $1 from every drink sold is donated to local organizations and charities for opportunities with the youth, which to me is so critical when you're trying to fundraise for like a baseball team or a soccer team in the community, knowing that you have a partner in a large organization like this that's willing to, give back.
Yeah, yeah, I think that's fantastic.
Um, do you have any other thoughts on Starbucks or Dutch Brothers?
Yeah, so interestingly, I think Dutch Brothers has a huge expansion opportunity. They've roughly doubled since they've gone public. So I think today they have it's like 900 plus stores. Um, but interestingly enough, most of them are only in a handful of states. So I do think that once those markets get saturated, which even as they're opening new locations, those new locations in those markets are doing well. So they haven't really had an issue with cannibalizing their own same store sales yet. Um, I think you could see them in 5 or 10 years have a few thousand stores. Um, Two, I do want to point out their rewards program, called Dutch Rewards, um, and almost 70% of their transactions are rewards member transactions. So to me, um, that's showing that there's a stickiness there where somebody's going in, having a first beverage from Dutch Brothers, saying this is amazing, signing up for the rewards program, and then they just keep going back. Um, so that's huge. That almost 70% of their transactions are rewards. That to me, that's a really high hit rate, and it shows a high retention rate. So those two reasons are my primary drivers to investing. And I think the valuation is pretty cheap. as of right now.
Yeah, and I think to your point, I think what was it? The Dutch Brothers opened 38 stores, I want to say, this last quarter, just putting them north of a little over 800. With so scaling at that rate, you could definitely see them continuing to grow into the thousands as
Yep.
they continue forward quarter by quarter. But yeah, I love the stickiness of any sort of app based system that, because the more you can integrate people into that mobile app experience, making that interface friendly, getting those orders in, making it so that they can redeem them quickly. I will speak to Dunkin'. I know they're not publicly traded, but I used to love their point system, and now I don't use it at all because I just find it, you know, not as beneficial. Where I used to get a drink, earn enough for a free drink on a regular basis. Now I'm like, why have I still not made it to the free drink level? And
Yeah.
that's where I feel like Dutch Brothers, um, you know, continues to excel. They typically offer 5 points for every dollar spent, which is phenomenal. It's not a dollar for dollar, um, allowing customers to accumulate points more quickly, which, to my point, I felt like I was losing with some of the other systems. Even Starbucks, I feel like it takes me forever to get to a free beverage.
I don't like that they expire too. The rewards for
Is it
Starbucks
with that?
expires too. Yeah, I that's a huge turn off for me. I don't You don't need to force me to rush in and buy something. If it's good enough, I'm just gonna go in and buy it.
You know who else has expiring points? McDonald's. I know they're not coffee. They are coffee to a certain extent. It is pretty good.
Hmm.
If you're at a McDonald's, their coffee is pretty good. But the expiring points, I don't need to get an alert on my phone being like, you have 3,000 expiring
Yeah.
points. I'm like,
Yep.
why should they ever expire? Like,
Right.
just let me continue to accrue them,
Yep.
and I'll continue to go there. Maybe I'm saving up for something. Um, who knows? But yeah, I agree. The Starbucks points expiring, just not a fan of. Just not
Yeah.
a fan of.
Agreed.
Did you know that the birthday reward for Dutch Rewards program, that they get special offers with not just free drinks? And that's another thing with Starbucks. Why is it I have to show up on my exact birthday to get the free drink? Why can't it be like my birthday week?
I hope they're listening. I mean, Elliot just took a big stake in Starbucks. Maybe they're listening.
Yeah, I mean, again, it drives me nuts that it's like I have, everybody's busy, especially on their birthday, and to feel the need that
Yeah. Yeah.
I have to get there that particular day and
Yeah.
not like over a
How
span of
how important are you, Starbucks, that you're gonna make me come in on my birthday? Come on.
to your point, it's not even respecting my birthday. It should be like, enjoy your birthday, come in the day after, come in the day before. We're here to celebrate with you whenever you get here.
There you go. Elliot, Starboard, these two big hedge funds just took stakes in Starbucks. Let's see it.
I mean, I think that that's the point of why they took stakes in it, because when you see the past 5 year performance, that's when you see activist investors, hedge funds start coming into these big companies, and they're like, what's going on? Because the board's getting upset, shareholders are getting upset. People don't want to see flat growth.
Yep. Yep. And I think they're seeing in some of the states that Dutch brothers are in, California, Texas, Washington, um, they're losing market share to Dutch brothers.
And it's easy to see why, because I feel like Dutch Brothers right now is everything Starbucks used to be, but they kind of lost their way. But they're
Yep.
also in insane growth mode. And,
Yep.
I
Yeah,
just,
Dutch Brothers took the things that made Starbucks Starbucks 20 years ago and adapted it for a drive-through culture. That's how I see Dutch Brothers.
you know, in conclusion, I just want to add, my final thoughts on Dutch Brothers is pretty simple. You know, if you're looking as an unfoolish investor for a company in coffee, right? And again, I love coffee. Everybody loves coffee. Well, maybe some people don't. That's positioned as a dynamic and rapidly growing player in its industry that hasn't been around for 5, 10, 15, 20 plus years. It has that unique brand identity. It's got the strong community focus. It's in insane aggressive expansion mode. To your point, we could be looking at not 800 Dutch Brothers like we have right now, but 1,600 Dutch Brothers in the next 2 to 3 years. And they're like Chick-fil-A. They have this insane emphasis on customer experience. I mean, for me, dripping into Dutch Brothers at these price points is so critical. And I feel like that to me, I'm going to see that compounding
Yep.
benefit 5, 10 years out once they get to that 1,600, 2,000 plus store level. And I think that as they continue growing over the next 10 years, $29 a share, even if it's been relatively flat or sub 30% over the last couple of years, it's so cheap. If you are unfoolish and you look long term at the compounded interest in the cheaper price today, because I guarantee you,
Yep.
you're going to be like, oh, I'll buy it at $90 a share. That's a deal 5 years from now. And you're like, why wasn't I buying it at $29, $30 a share? Where's my 2x return on that?
Yep. I mean, to your point about return, I mean, the market caps, if you think Dutch Brothers can become as big as Starbucks is, which it might, you're looking at almost a 20x return from market cap. So Dutch Brothers is about 4.5 billion market cap. I think Starbucks is close to 90 billion. Um, so if you think you can get that big, um, it's a pretty attractive price today. Good entry point.
I couldn't agree more. I couldn't agree more. And I think that, 4 billion, 5 billion to 90 billion, it can be done. It can be done.
Yep.
Um, well, that's it for this week's episode of Unfoolish Investing. Do you have any final thoughts, Larry?
Buy and hold.
Buy and hold. I love that.
Mhm.
And how do we buy and hold? In our
Long
friend
term,
Bronco
baby.
Fields,
Yeah, set it and forget it.
set it and forget it. When you buy your stock, set it and forget it,
Thank you,
especially with the
Ron. Life
index.
lesson.
I hope you enjoyed this week's episode. Don't forget to hit the like and subscribe button. And until next time, stay unfoolish.
Thanks, everyone.